Hi, everybody. My name is Dale Parker. I'm with CROPA Media. We're back here again for our third installment of the Money and Banking series. And I'd like to introduce you to Lydia Faleye of Truist. Hi, Lydia. How are you?
I am great, Dale. Thank you for having me.
Absolutely. It's great to have you again.
All right, Dale, thank you so much. So, welcome back, everyone. If you've been following the series, we appreciate that. Money is such a big, important part of our lives that it's really something that we should talk about. I know people say don't talk about your money, but this is a scenario where we really need to talk about our money. And so, thus far, we've done an overview of all the different parts of this series. The second part, we really started digging into our agenda. And our first part of our agenda was tracking your expenses. So, how do you track? How do you keep up with all those dollars? So that's important. You need to know how to track, how to, make sure you are tracking. Make sure you're writing it all down, or you have some system where you know where every single penny goes, because all of those pennies are pennies that did not come easy. So you want to be sure that you know where your penny's going. Then we talked about determining your disposable income, which if you heard me last time, I do not like the term disposable income, because we do not dispose of any money. We do not throw any money away. Okay. But it is the term that is used for what you have left over after you take everything that you have coming in and you subtract everything that's coming out. What you have left over is considered disposable income. Are we going to save that money? Is it going into investments? Is it going to pay down debt? Once you see what you have left, we talked about setting your financial priorities, or what are your financial priorities? Setting that priority. If you lost your job today, or you lost a significant part of your income today, what things do you know you would have to continue paying, and figure out a way that you would have to continue paying? But I'm talking about the necessities. I'm not talking about a Range Rover. I'm not talking about land. I'm not talking about a Bentley. I'm talking about whatever gets you safely and securely from point A to point B. We talked about setting SMART goals. Oh, what's a SMART goal? SMART goal is a specific goal. So you exactly say specifics. It has to be a measurable goal, something that you can actually track. It has to be an attainable goal. So saying I want to be a millionaire by tomorrow probably ain't going to be attainable unless you're going to spend a lot of money in the Powerball. Or it has to be relevant. It has to be something that makes sense. Yeah, we want to be a millionaire tomorrow. It would be nice, but that really doesn't make sense. And then it has to be time bound. So put a time stamp on it. Taking it from being very vague to now making it a SMART goal. So it's something that you can track, you can measure, you got a time stamp on it. And that way you know if you've achieved it or not. And then we talked about short-term goals and long-term goals. So short-term is anything under a year. 3 to 6 months up to a year. Under a year is short-term. So you might say,
I want to thank Lydia for giving a great recap. This Money and Banking series can help you to gain that financial wellness that we all really do seek and deserve. Banking basics. We're talking about banking and the basics of banking. We want to, first of all, help you to understand which checking account is right for you. Oftentimes you're going to the bank, you open a checking account, give me a checking account. But you need to understand what the differences are. There are many options out there for the checking account that's right for you. So understanding that. We're going to talk about parts of a check. Well, you see all the numbers and boxes and lines on a check. We're going to talk about exactly what each one of those are and how to complete a check appropriately. We're going to talk about overdraft protection and overdraft coverage, overdraft fees and options. Overdraft meaning that you see NSF, insufficient funds. Overdraft protection and overdraft coverage is for those times where you might be a little over your bank account, your limit, as far as the money you're spending. Overdraft fees and options, those things aren't free. Check cashing, depositing checks and prepaid debit cards, understanding that. And finally, we're going to wrap up with what you need to know about the FDIC, the Federal Deposit Insurance Corporation.
thank you for that. First, we're going to start about why a checking account. What makes a checking account so special? Well, a checking account is really one of the best ways to control your spending. It's safer than using cash and checks. You have debit cards, you have proof that you paid someone. You can actually get copies of your checks. You can get transaction statements where you've paid people. You can deposit your check and cash for free. It allows you to make payments. You can check your balance. You can transfer funds, and you can categorize your spending. So when you're looking at checking accounts, you really want to have a conversation, a really detailed conversation with your banker about which checking account would suit your needs. No two people are alike, no two financial situations are alike. And you need to know how you're going to use it, how often you're going to use it, the balances you plan on keeping in it, and that information is what's going to help you determine what you have in that checking account or what type of checking account that you have. So let's talk about the basics part when it comes to really digging into which account is right for you. So, does this checking account, do you get interest on your balances? Is there a service fee? That's important. How many locations are available? Now, I know we are in the technology age and everything is done over our cellular devices, or they're done online. But you still want to know that if I need to get into a branch, I can get into a branch. To me, there's nothing like sitting down face to face with somebody and having a conversation. Okay. So branch locations, where they are they convenient? Overdraft options, what the fees are, and if there are ways to avoid them. And anything else you can think of regarding that checking account. Then you want to know, how can you access that information? Is there online banking that's available? If you do get statements, are the statements free? Are they paper? Are they electronic? If you do have online banking, can you pay your bills through your online banking service? And is that free? Does it come with email alerts? Does it come with balance alerts? It'll tell you how much you have in your account. Does it tell you anytime something's come out of your account or something anytime's been deposited into your account? So you get those regular alerts. So like Dale said, people who have money are always in their money. So you need to know if this is available with the type of checking account that you're being presented. You need to know if there's mobile banking available and is that free? Because we don't leave home without our phones. Our phones go everywhere with us. And so that's really important to know that, hey, can I take my banking on the go? Another thing you want to consider, is there a mobile deposit option? So if you have mobile banking, does it allow me to do more than just look at my balances and my transactions? Does it also allow me to do other things? Can I make payments? Can I transfer money with Zelle? Can I make outside transactions? Can I transfer money from my bank here to my bank there? Or, but can I make a deposit if my mom or auntie or first cousin gives me a check, because, they still write checks? Can hey, I'm in a time crunch. If I need to, can I just take a picture of that check, with my phone, and can it be deposited that way? That's super convenient. Super convenient. So you want to know if they have that option.
All of those are really important services to have tied with your checking account. So don't be afraid. I'm just letting the audience know, don't be afraid to have your banking app on your phone. I know at least some years ago, people were really concerned about money and online and the web. Feel free. There's a lot of security involved in it.
Well, there's so much encryption that is involved.
Right.
There's so much security that is involved that no, you're safe. Let me tell you, there are so many regulations that we have to keep up with on a yearly basis about keeping up with, customer and fraudulent information and being on top of things. And, everything. And I can tell you, because we're talking about trusts, right? We are so up on how you spend your money. If you spend your money in a way that's not consistent with how you normally spend, and it's not about dollar amount either. It's if it's inconsistent with your regular shopping habits. We will call you and say and send you a text message and be like, hello, are you at Walmart trying to buy a laptop right now?
I want to make the point that the banks are there to help protect us, at least on that level. So take advantage of that, the services.
Make sure that you have a way to access it. You have, you can ATM, you can do person-to-person payments. If they do charge ATM fees, what are those fees? I mean, if you use their machine, if you use somebody else's machine, what that looks like. You need to be aware of everything. Does it come with a debit card? Does a debit card have a rewards program? Can you earn cash back, or is there any other type of rewards program that comes along with that? If you write checks, does there cost? How much checks cost? Checks do cost money, y'all. How much do they cost? You know, how often, you know, do I really need to write checks? You know, is it something that I have to do? Am I going to have, do I have to spend that money getting checks to write, you know, when there's so many options out there? But is there going to be a cost to me if I write a check? You know, some bank accounts are very, very basic, and they charge you for all the little stuff because they want cost to be as little as possible, and everything the bank processes costs money. So, you know, if they can eliminate some costs or reduce some costs, that they might offer an account that might allow you to write only 5 checks a month or something like that. So very important information to know. Well, let's just review the parts of a check. So when you look at a check, you will see your bank's name on that check. And that's usually and it can be different places on the check. A lot of times it's bottom left hand side of the check, right above the routing number. Usually it can usually where it is, but it can be anywhere on the check. So don't get caught up on that. Your bank name is on there somewhere. Your name is on there and your personal information is on there, and that can be by choice. You don't have to have your personal information on there, but I'll tell you, people are more likely to accept your check if you do have some personal information on there. Your address and the phone number, they prefer to have that information already pre-printed on a check. You'll have a check number on there, and that is for recording purposes. If you write check 1001 for $100 and write another check 1001 for $250 and write another check 1001, how do you know which check it is? Having a check number does help you keep track of what checks have come through. So when you're looking through your history and your transactions and your statement, you can say, this check, oh, here it is. It's on my statement. This is what I wrote. I can check it off saying it's been cleared. It's fine. But check number 133 has not cleared my bank statement yet. They're still holding on to that check. For some reason, they haven't made it to the bank, or they have not utilized any mobile deposit service
right.
for that. So you want to put a date on it. And listen, you want to put the date on there, the date that you are giving that check away. Writing a post-dated check. And if you don't know what a post-dated check is, it's right. So today is the 15th. If I say, Dale, I'm going to give you this check today, but I'm going to write the 20th on here. Don't catch it till the 20th. Okay. Technically, that is not something that we should be doing. Technically, that's something that is illegal to write a post-dated check. If it gets processed, it's there. Technically, it shouldn't have been a post-dated check anyway. So please don't give anybody a check until you are ready for that money to be taken out of your account. So pay to the order of, that is your demand of where you want those funds to go. So pay to the order of, please write it to a name. Please don't write it to cash. If you write it to cash, anybody who finds that check, say it gets dropped, anybody can pick that check up and cash that check. There's a dollar amount. You see a dollar sign right to the right of pay to the order of. That dollar sign is the actual digits, the numerical written number, the digits. So if I'm writing him a check for $100, it would be 100.00 is what I would be writing on that portion. That's the numbers. It's very small because you're not writing it out in words. Now that long line underneath that, it goes all the way into the end. It says dollars. That is where you write out the words. So I would literally write ONE space HUNDRED, right? 100. Another tip you want to do when it comes to writing the dollar amount, the actual writing out the words of the numbers that you're writing that check for. That is the legal line. That is what you will get paid. So if someone writes $1,000 on that dollar sign line, 1000.00, if they write 100 ONEHUNDRED on that legal written line, unfortunately, they owe you $900 because the bank is only going to pay you $100 because that is the legal amount. Another thing you want to do when you write it out in words, once you finish that last word, you want to either complete it with a fraction for cents. So if it's 50 cents, it's 50 over 100. And then you want to draw a line from that cents all the way over to the dollars. Or if it's just a straight $100, even if you write 100, write a line all the way to dollars. And let me tell you why. When we have minds that can come up with any kind of scheme you can imagine, what if you wrote a check for $100? What if you didn't fill that line out and drew it all the way out to dollars? Someone could write 1,000 behind 100, and legally that check would be worth $100,000. Make sure you fill that space and draw a line all the way to the end. So,
and that line helps to make sure that nobody can write anything after the written out portion of the dollar amount.
yes. So there is a memo line that is not required by any financial operation or institution. That's just for your purposes only. And then to the right of that blank line to the right, it says your signature. You sign it. Sign it with your signature. Please sign it. The routing number is there. So your routing number is the bank's number with the Fed.
The routing number it's in some ways it's like to identify your bank.
Yeah, it's the bank's. Yeah, it's the bank's number. And each individual bank, each bank has its own routing number. So there's one for PNC, there's one for and there can be different per state as well. That first inch and a half, when you flip it over, there's a line, an endorsement line. You want to sign above that or on or above that endorsement line. That's the only space legally you're supposed to write on a check. Everything else is for recording purposes when it's going through from this bank to that bank. That's the rest of the space of that check is where that information is recorded. So really you got only that inch and a half on that line or above to write anything on the back of that check. All right, so let's talk about overdraft protection and overdraft coverage. So first, an overdraft, you overdraft. You pull out more than what you have in your account. You have $100, you take 120 out, you have overdrawn by $20. It's an overdraft. You take more than what's available in your account, and then that leaves you with a balance of negative $20. Okay. Usually that comes with a fee. So financial knowledge says we know what an overdraft is. Financial wellness says, oh, we're not going to do that.
Right.
We're different.
Right.
All right. So there is a difference between overdraft protection and overdraft coverage. And overdraft protection it's like insurance. If anything were to happen, this thing kicks in to cover whatever it is that happened. So overdraft protection is usually like it's linked to a savings account or it's linked to some personal line of credit that would cover any purchase or check or anything that could come out of your account that would put you in the negative. It kicks in, it deposits that little bit extra into your account. No harm, no foul. If it's a line of credit, then there is interest involved, might be a fee. If it's from your savings account, might be a fee, but it's no interest. It's your money. You pay yourself back. No harm, no foul. All right. Overdraft coverage is different. Overdraft coverage is when the bank makes a decision on whether or not to pay your items. So there are some transactions, could be checks, could be debit card, ATM, anything electronic. They might go ahead and choose to pay those items. That's where they are covering you. The bank is making a decision to cover you. They could make a decision to not cover you as well, but that's the coverage is the bank's decision. Protection is your option. Okay, you can opt to have protection by linking it to a separate checking or savings or credit line. Coverage, though, is not you can opt in or opt out. If you opt in, you say, I am fully aware that if I overdraw my account, my bank is going to charge me this fee for overdrawing my account. So you say, hey, I'm leaving it. I'm throwing myself at your mercy. If I go over, you can pay it, you cannot pay it, but either way, I am choosing to bite the bullet and pay the fee. Pay your fare. And you are choosing to pay your fare. You can opt out, which says, don't even think about it. If I ain't got it, send it back. If I ain't got it, don't let me spend any more that I have. If you have 100, you're trying to spend $120, decline my purchase. Don't help me. Don't let me hurt myself. If you know I don't have it, you have access to that information knowing at that moment I did not have that money. Please don't let me go over. And that's opting out. So those are the options you have with coverage. If you say opt out, that's your choice and your decision. If you opt in, then the bank makes a decision whether they want to pay it. And even if you're opted in, there's no guarantee it's going to get paid. That's the difference between the two. So legally, unless a client opts in, we can't charge overdraft fees on ATMs or debit cards and things like purchases like that if you've opted out. If you've opted out and something comes through to overdraw your account, you're opted out. We can't charge you a fee for it. To avoid having to use any type of overdraft protection, if your employer or how you're receiving funds, if they offer direct deposit, opt for the direct deposit. I know it used to be a thing when direct deposit first kind of started coming out, and I want to see my check.
Right.
You can see your pay stub. They'll make sure you get your pay stub. You can calculate all your hours. It's not going to stop. You can look at the balance, make sure it's what's on that pay stub. You can avoid that stress of having to get it to the bank. Just do direct deposit. Make sure your checking account is current. Make sure you are watching what's coming in and what's going out. Make sure you know what's going on. Make sure you track your gym memberships, your subscriptions, all those things that happen automatically that we say, okay, yep, it's going to be automatic. Okay, yep. And we sign on a dotted line or we click agree online. Just make sure you remember, oh, yeah, that comes out the 21st of every month. Put that somewhere so that the 21st of every month, that's coming out. Your car insurance, they want you to do that debit automatically. Make sure you know what day that's coming out every single month.
And that goes back to what we talked about in the previous episode where we talked about, tracking your expenses.
Tracking your expenses. You got to know. If you know, you know.
Right.
So you got to know. Use use online banking, use mobile banking, check your balance, look at it regularly. People that have money, they know where their money's going and they know what it's doing. So don't leave it to chance. Also setting up the alerts. And we talked about earlier about looking to see if they offer email alerts in the checking account that's right for you. This is why. So if something's coming out and you're like, oh, I forgot that was coming out, then you have a quick option. You can deposit some money really quick or make a quick transfer from your savings account. At least you're aware, of things that are happening. Or you say, oh, that came out. I can't go to the movies tonight, or I can't go out to dinner tonight because I know this is coming out or this has come out. And so now I have to stay within what I have. And then, ATM fees. If you use another ATM machine that's not your bank's, there's usually a fee for that. If you're a client of Bank of America and you go to PNC's machine, you're going to get hit twice. One, Bank of America going to say you ain't loyal. PNC going to be like, you ain't our client. You're going to get hit twice. You can be paying up to $6 for 20. So $26 to get $20 out the ATM machine.
Right.
Just go into your bank and get it. Or when you go to the grocery store, get 20 cash back. And that won't hurt. But yeah, try to avoid that. So an overdraft fee we talked about is a fee that you get charged when you overdraw your account. So if you overdraw by 20, they're going to tack that fee onto the 20. A return item fee is everything that's presented but's not paid. So say you had your check, a check that you wrote to somebody, and by the time it got to you, maybe auntie held on to that check for 3 weeks and you thought she cashed that check and she had not. Auntie a little slow getting it to the bank. If you don't have that money that you wrote on that check for auntie, then that check is going to go back to auntie. I mean, she's not going to get that money in her bank account, and you will be charged a return item fee because they sent it back. Legally, there is a maximum amount of overdraft fees that you can be charged in one day.
And how much are they typically now? Like $35, right?
$35 to $40. Yeah, anywhere between $35 and $40. So you don't want to have to pay that extra. If you owe 20, you definitely don't want it to be 55.
Right. And I tell you, philosophically, these are the things that are of interest to me that, like you said, if you don't have $20 and then you get hit with a $35 fee, you're up to $55. You don't want to be in that situation at all because it's hard to get out of that.
Yeah.
It's really hard to get out of that unless you're just, waiting for payday and but then you're going to eat up all your check.
Yeah. Preach, man. Preach. Yes.
Right.
Certainly. So the negative account balance fee. So a lot of banks will charge you if you stay overdrawn for X amount of days. I know there were some places that would charge you a fee every day you're overdrawn. So overdraft transfer fee, we talked about negative balance. Overdraft transfer is if you have money in your savings and your savings account is linked to your checking account. If you catch it, if you see it's happening and you transfer the money, there's no fee. If the bank does that service for you, then there's a fee because that's an extra service that they've provided. So there's an overdraft fee threshold. Some banks, if you overdraw by less than $5, they won't charge you an overdraft fee. Okay. It might have to be over $5 or so. We talked about overdraft coverage. Funds availability is how much is available to you. So if you make a deposit, so you make a $500 deposit, that day, you might only have $100 available to you that same day, and the rest might be available the following day. If it's a larger check or you're a new client and we're trying to bill you out, it's a relationship. We try to bill each other out. Right. If you bring a check, it might be a normal check for you, but it's new to the relationship. So that check might be put on hold for 2 days. It can be put on hold for up to 7 business days even, not even just calendar days. So you want to know what's available to you when you make that deposit. Check cashing, depositing checks, and prepaid debit cards. Is it really safe to carry around wads of cash anymore? It just, I get it. Keep a 20, keep a little something on you, emergency cash. I ain't talking about that. I'm talking about people's $500, $600, $800 paychecks and cash in their pocket. That is just not something we want to do today.
Right. And not even just the dangers of being, robbed or assaulted for it, but I mean, going back to our principles from our previous edition episode, where you want to be able to track your money, you want to put money aside. How are you going to save it if you're cashing a check?
Yeah.
I mean, you've got $1,000 in your pocket.
Yeah.
And we all know how fast it goes. So, I mean, so you don't want to do that, in my opinion, because if you want to understand where your money is going, you want to have and like we talked about before, like how the bank can act as like a bookkeeper of sorts, where it's recording every transaction you make, non-cash transactions, and you'll have a good accounting as to where your money went. But if you cash a check, I mean, you could buy anything because you got money in you. As the old people would say, the money is burning a hole in your pocket, and that's what happens with your cash. So you look up, 4 or 5 days later and you have no money.
Yes.
That's part of the reason why.
Yes. So true. So true. Please, if you can avoid payday lending at all costs, please try to save some money. Have a little bit of a stash or something that you can save for an emergency, because a payday lender is a loan shark and they are charging you 300 to 500% interest. They say payday loans can range up to $10 for every 100. I've seen up to $20. I've seen people who have said they pay $20 per 100 to borrow. So $500 is $600. Fees.
Right.
Just to have a whole extra $100 in fees. So versus having a checking account where you can have it direct deposited into your bank, you can do an ATM deposit. There's so many options that you have, and you can have these accounts most of the time with no fee. Most of our accounts are no fee. You may have a monthly service fee. Again, most of them are no fee. And then you can make deposits in person. You know the person. You ain't got far to go. We ain't open at night, so you ain't got to worry about going at night.
Right.
So you and when you have a relationship with your bank, and I know we're talking about Truist because that's who we are, all right? But when you have a relationship with your bank, you're in a much better position. So I always say you should have a relationship. Not only should you have an account, but you should have a relationship with your banker. Why? Because say you just got coming to some money, and say there's a deposit promotion going on where we have a 3% interest on $1,000. Well, that sounds pretty good considering the rates recently have been 0.05%. And you can earn 3%. Granted, it's not the 8, 10, and 12% from back in the day, but hey, we out of the ones and the twos. That ain't too bad.
Yeah, that's called making your money work for you.
That's how you start. And if you have a relationship with your banker, they'll be sure to tell you because y'all friends.
Right.
I'm gonna make sure my friends know all the good information.
Right. Absolutely.
Have a relationship with your banker. Get to know your banker. Let your banker get to know you. Let them know what your financial situation is, where you are, where you're trying to go, so your banker can help you figure out your financial plan. That's what they're there for. Not just to open accounts or get you loans. They're also there to help you figure out your financial situation. There's a money account card that it works like a checking account, but it's a card only. So if you don't like checks or anything like that, this is a reloadable option that you can have direct deposit on and still have an account. There are some other options that we have. Of course, we have checking, just as because we're Truist. We have our Truist One account, and our Truist One account eliminated all overdraft fees and all overdraft related fees. So that overdraft transfer fee we talked about, gone. That return item fee, not even a thing. That overdraft fee, not happening. We eliminated all of that. We, as Truists, we want to care for our communities better. So we eliminated those things. Also, we have a Truist Confidence account. And the Confidence account is just that. Guess what? Hey, we're just doing this series now. If you never knew anything about banking and had a run-in with a bank, you didn't know about overdraft fees, overdraw your account, they close you out, put your name out there in the street, i.e. check systems. Out there in the banking streets,
Right.
systems. Our Truist Confidence account is not run through check systems. So if you're looking for, you really want to get a handle, you want to manage, you feel like you can't, you can. You can. There's an option. You can do a direct deposit, or you don't have to have direct deposit with a Confidence account. You do just have to use your debit card 10 times a month. There are other options that are out there that will keep you from having stress and heartburn around fees. We've eliminated that to help you with your budgeting and help you with being able to manage your money better. You do get a Visa debit card. With that, this is the money account has a Visa logo on it. So anywhere Visa is accepted, you can use that debit card. Now, I will say, just as a side note, there are some places you don't want to use your debit card for. There are some places you really want to have a credit card. There are places you can use a debit card, but I would highly suggest you not. And that is if you're renting a vehicle or if you are staying at a hotel. I would highly suggest you have a credit card to use, because they hold your money, especially at a hotel. They holding that money for incidentals that you don't be having no incidents. But that money off of there, you could be tripped and come back and be 5, 6, 7 days after your trip and just getting that money back. And that could have been money you were budgeting to spend while you were on your trip. Same thing with renting a car. They put that car deposit on there. It's going to take time to get that money back as a hold, but they are holding up your money. Right. While you were counting on that money to spend on vacation. So that's why I would say don't use your debit card. Please use a credit card. Or if you do use a debit card, just already go with that in mind. Save a little extra, know that they're going to charge you. And so when you come back, hey, that's extra that you have when you come back, but prepare ahead of time for that, because those fees really hurt when you are already trying to have a nice time and you stressing out, having heart palpitations over them holding your money. The money account is reloadable. The money account, you can join that up with anybody that has an ID. You can get them that money account card. So if you're teaching young people, and I would say any of the accounts really, if you're teaching young people about accounts, then we don't have overdraft fees anymore. So it's a safe environment for them to learn how to banking. And now that we don't have any overdraft fees, it really is a good environment and a safe environment to teach your young people about how to bank. And they can bank safely, and they can learn the ins and outs of managing money without having to worry, about them overdrawing the account or them having any type of financial issues. You can really do that now and not stress over it. So whether it's a young person, anybody with an ID, a government issued ID, between ages 14 and up, can have a checking account with an ID. Now, if you're under 18, you have to have an adult on there with them, of course. Minor savings accounts, they're free across the board. Any minor under 18 can have a savings account, no cost. If you're a student, so any student between 14 and 24 years old can have a student checking and student savings. No fees. So there's no monthly maintenance fees. There's no overdraft fees. It's like a whole win. Okay. So it's really a good environment for a student to learn how to manage their money without the parents saying, oh my God, don't spend too much. Don't worry. They're not going to be able to. So what you need to know about the FDIC. Okay, the Federal Deposit Insurance Corporation. So really, y'all heard of the Great Depression? The Great Depression, that's when the FDIC was formed, because when the Great Depression hit, people was knocking down the doors of the bank trying to get every dime they put in there out. The Fed never wanted anybody else to be scared to bank. So they created this insurance that protects people's funds up to $250,000. And it says in more in some cases. And so it can be up to $1 million. So that it depends on account typing and account titling. But you can get up to you can really get up to $1 million. Everything that's covered by FDIC, your checking, your savings, your money market deposit, your CDs or your certificates of deposits, those are your time held deposits, and your IRAs. Okay. But your IRAs, they're insured, but they're insured by something different up to 250. Okay. And then there are accounts that are not covered. Anything out here in these streets is not covered. So anything that's risky, anything that's dealing more on the investment side, it's covered. It's just not FDIC covered. There is a separate type of insurance that goes along with some of these things. So there is some coverage out there, but it's not FDIC coverage, okay? So the mutual funds, money markets, annuities, your treasury securities, and your stocks and bonds. They do have some coverage, but it's not FDIC coverage. So let's say Mary has a checking account at Truist with a balance of $1,000. And she has a savings account at Truist with a balance of $20,000. Are her funds insured by the FDIC? Well,
yes.
Exactly. She's got $21,000. Not quite to that $250,000 mark. So yes, she is fully covered. Then you have John, who has an IRA and at Truist in the amount of $150,000. And he has $200,000 in combined deposits at the bank. We're talking $350,000. So there might be some structuring things that need to take place. All of it is not covered by the FDIC.
Right. Okay, the 200 is covered.
Yes, the 200 is.
Right.
The 150 might just needs to be structured a little different in order to get some coverage. And full transparency, just so you know, this isn't a secret. It's no secret. If you are a single owner of an account, you have $250,000. If there's you and a joint owner, then that gives you a separate $250,000. If it's you and a beneficiary, like a payable on death account, that gives you another $250,000. There's another way to do that too. It depends on, I think, the primary as well. So if it's you're the primary on a joint account, that's $250. Another joint account with the other person as the primary is $250. That's no secret. There's no secret. There's no secret. The titling and the types of accounts will adjust, and you can get up to $1 million.
All right. So we are now at the end of this episode of the Money and Banking Financial Wellness Series, brought to you by CROPA Media, myself, Miss Lydia Fillet of Truist. Lydia, how can people get in touch with you if they want to find out more about money and banking and maybe some of the things that Truist offers? How would they be able to get in touch with you?
Email's the best way to get me, because I cover the Eastern Shore of Maryland, so I could be anywhere. Okay. But first dot last name, Lydia.Faleye@truist.com. And that's Lydia, LYDIA.FALEYE. Lydia Faleye at Truist.com.
Right. All right. And again, this series is brought to you by CROPA and CROPA Media. You can check out what we're doing at CROPA by going to our website. It is www.CROPA, CROPA1619.org. That's CROPA1619.org. You can see a lot of the things that we're doing at CROPA, the events, the workshops. This is a part of our workshop series as well. You can go to CROPA Media on YouTube. Check out our YouTube channel. That's where where you're seeing this episode, this series right now. You'll see a lot of other great work that we're doing in the community as well. So I want to say thank you, Lydia. Thank you to the audience for checking us out today and learning more about banking and budgeting basics, and to find a way to really understand how banking and money can, in our financial wellness, can improve our lives and give us some peace of mind. So any parting thoughts, Lydia?
Money is important, and it's something that we really need to know. We really need to have a conversation about. So don't be scared to talk about money. There's no shame. There's always grace. But you want to talk about it because you want to know about it, because you want to be about it.
Everybody, thank you again. This has been the Money and Banking series presented by CROPA Media, CROPA and Truist. Thank you, Lydia. Thank you, audience. We will see you on our next episode, where we're going to be talking about budgeting and saving strategies. Budgeting and saving strategies. So we're going to talk about the 3 main budgeting strategies, how to choose your budgeting strategy, how much can you save? We're going to help you answer that question. Understanding what interest is when we're talking about money, savings goals and planning, savings options at most financial institutions. So we're going to be talking about budgeting and saving strategies. Everybody stay tuned for our next episode. Thank you.
All right.